Hi, everyone. Welcome to the info session for the first round of applications for the Catalytic Climate Finance Facility in 2024. Before we dive in, here are a few key points to keep in mind. This webinar will be recorded for later viewing. We'll share the video link and slides with you. During the session, we'll guide you through the application process, which remains open until April 24. You'll gain insights into the CC facility selection criteria, receive tips on applying for funding and acceleration support, and hear from past CC facility grantees. If you have any questions, please use the Q&A tool on Zoom instead of the chat. You'll find the icon located on the toolbar at the bottom of your screen. And now I'd like to turn it over to Carla Orrego, Innovative Finance Manager at Climate Policy Initiative. Over to you, Carla.
Thanks, Julio, and hi, everyone. Welcome to our session. As Julio mentioned, my name is Carla Orrego, and I'm CPI's Innovative Finance Manager. And on behalf of the CC Facility team, we want to thank you for joining us today. The goal of this webinar is to give you guidance to help improve and better position your application to the CC Facility program. So the CC Facility, or Catalytic Climate Finance Facility, is a partnership between Climate Policy Initiative and Convergence, who are combining their expertise to scale climate finance by filling a market gap in mobilizing private capital. On one hand, CI is an advisory and analytical organization that works with governments, businesses, and financial institutions to drive economic growth while addressing climate change. Our work is mainly focused on the intersection of climate, finance, and policy, and in unlocking capital for climate action. And on the other hand, we have Convergence Blended Finance, which is the global network for blended finance. It has a membership of over 160 institutions, and its work is focused on increasing private investments in emerging markets to advance the UN Sustainable Development Goals and the Paris Agreement objectives. With that, let's move into today's agenda. First, we'll explain how the CC facility works and its role in accelerating the implementation of climate finance structures. Then my colleague Tran will lead you through the application process, providing insights into the key characteristics we look for in the proposals. And after that, we'll have the opportunity to hear from those who have successfully navigated this process. So joining with us today are Mauricio Rincon from Opportunity International, Hussein Sefian from Acre Impact Capital, both selected for the CC facility's inaugural cohort last year. Finally, we'll have a Q&A section to address any questions you may have, and please don't hesitate to type your questions in the Q&A tool here. Now, moving forward. Next slide, please. Before we jump into what is the Catalytic Climate Finance Facility and why it was created, I want to show you the climate crisis from an investment perspective. As you can see in the graph, the climate finance gap is increasing exponentially. Even though climate finance flows reached the 1 trillion mark for the first time in 2022, we still need at least a fivefold annual increase to meet the climate objectives set for 2030. Investment levels are far behind of what is needed for a successful low-carbon transition, so we need to act faster. And the question is how? How do we catalyze climate investments to bridge this gap? Well, in short, creating a pipeline of investable solutions that addresses the risk-return misalignment of investors and can attract private capital. Next slide, please. So to mobilize billions of dollars in investments to bridge this gap, we first need to develop blended climate finance solutions that are ready to be launched to the market. The problem is that there are many challenges that hinder the launch of high-impact solutions, which leads to a lack of a strong available pipeline. There is a massive and unmet potential for climate investment, mainly generated by the lack of a scale of existing solutions and the nascent and fragmented ecosystem. And over the years, Convergence and CPI have been working on the investment pipeline issue, trying to push investable and scalable structures into the market through both of their flagship programs, CPI's Global Innovation Lab for Climate Finance and Convergence's Design Funding and Market Acceleration Program. Next slide, please. As you can see here in the slide, the lab and design funding are programs focused on the earlier stages of the idea development process, more on the design and incubation side of the spectrum. The lab typically helps turn ideas into concrete mechanisms that are ready for the market, and design funding provides the initial funding to work in proving the concept. To put this in context, let's have a quick look at both programs. Next slide. So on one hand, the lab is a public-private initiative created in 2014 out of the need to mobilize private investments to tackle climate challenges. It is an incubator program that develops innovative financial mechanisms to unlock private capital into climate change mitigation and adaptation in developing countries. Now, with a decade of operations, the lab has a portfolio of 68 instruments that have collectively mobilized over 4.1 billion in climate investments. And it has grown into a member-supported organization of more than 90 institutions, including governments, development banks, philanthropies, and private sector experts. The lab success is based in 3 key pillars. First is strong collaboration between the public and the private sectors. Second is to openly source concepts worldwide. And third is having a powerful network of financiers and policymakers to help move solutions into action. Now, shifting to Convergence's design funding, next slide, please. It is a market acceleration program providing early stage funding focused exclusively on the design of innovative blended finance solutions. The design funding program has provided over 16 million in grants to more than 60 blended finance structures, which have collectively mobilized 1.5 billion. Convergence has been successful in building the field of blended finance through 4 key pathways. 1, providing thought leadership and market intelligence. Second, connecting relevant actors and building a blended finance network. Third, developing learning resources and educating the market. And finally, offering a live deal flow. So, next slide. One of the main lessons learned from running both the lab and design funding is that after having a proof of concept or initial pilot, there is still a critical gap to go through the market rollout phase towards scalability. And this is evidence in the 3 to 4 years runway to market that the solutions experience were trying to implement and scale their proposals. During this transition phase, there is a critical need to generate business traction, advance implementation, expand the skill sets gained from operating at a smaller scale, and develop the resources to achieve scalability. So what happens next? To bridge this gap and help us scale solutions more quickly, Convergence and CPI partnered to launch the Catalytic Climate Finance Facility, which is a program focused essentially on scaling sustainable climate finance globally. Next slide. So the CC facility goal is to accelerate implementation of financial structures, bringing a holistic solution to a fragmented ecosystem. The facility will combine Convergences and CPI expertise, as we mentioned, to turn market-ready mechanisms into investable and scalable solutions that will ultimately increase the available pipeline in the market. Given the urgency of the climate crisis, we wanted to create a sort of one-stop shop that will provide the necessary suite of tools to these financial vehicles that have already been tested and are ready to make a bigger impact. The CC facility is designed as a 100 million program that will provide a bundled package of grant funding, customized technical assistance that will be tailored to each solution's specific needs, and knowledge sharing resources through a learning platform. Selected ideas will receive these market acceleration services, aiming to overcome the typical valley of death post-feasibility and early incubation to accelerate growth and scale. We launched the program last year with the support of our anchor donors, Bill and Melinda Gates Foundation, Global Affairs Canada, the Department of Foreign Affairs and Trade of the Australian Federal Government, and International Development Research Centre. Overall, we are targeting blended finance vehicles addressing climate issues in developing countries and across a wide range of sectors. And we have a special thematic stream for sustainable agriculture and adaptation in Africa and South Asia. With that, let me pass it over to Trang to provide more details about the program value offering and the application process.
Thanks, Carla. Next slide, please. The facility accelerates the implementation of climate finance structures through 3 offerings. One being grant funding of up to $500,000. Second, technical support for up to 18 months. And third, a learning hub. The initiative aims to be an ecosystem builder and address a market need in scaling up blended finance structures focused on climate change. Coming soon, the facility will launch the Learning Hub to share knowledge resources and to build the market. Drawing on CPI and Convergence's extensive experiences in research, the facility will look at best practices within the facility, but also within the broader ecosystem to foster market-wide learning. Next slide. The facility will launch 2 application rounds per year. We're currently in the first round of 2024 and looking for innovative blended finance structures targeting climate change to be part of this next cohort. Grantees are expected to dedicate about 1 or 2 days a week to be part of this program for up to 18 months and allocate 1 or 2 key individuals to be the main focal points with the facility. Grantees can use the funding to cover a broad range of activities needed to launch and scale a structure. That could include finalizing the capital structure, the financial model, establishing the legal structure, finalizing legal and fundraising documents, and pipeline development. Funding is advanced on pre-agreed milestones and deliverables that are negotiated with grantees upfront. Additionally, grantees receive up to 70 days of customized acceleration support across strategy, operations, and fundraising. This is to fast track the rollout of the structure, secure additional funding, and generate additional business traction. And lastly, there are additional benefits as part of the program. Throughout the life of the program, you do get access to complimentary Convergence membership and deep investor networks as well. Next slide. So what are the key characteristics we're looking for? The blended finance structure must focus on tackling climate change and on sectors that are underfunded globally. The focus of the geography of the structure must be on developing countries, but applicants don't necessarily need to be based in a developing country. In terms of the maturity, this is really important. We're looking for structures that are market ready, meaning that they've completed the feasibility, proof of concept, pilot, or MVP stages already. With respect to the team that are supporting these structures, and we're looking for experienced teams with proven track records and experience in the targeted sectors and geographies, and also a willingness to engage with the program for the 12 to 18-month period, as well as a good understanding of the local context that their structure is focused on. And finally, the type of organization that could apply. We don't accept applications from individuals. It has to come from an organization or a consortium. This can be from advisory firms to foundations, NGOs, fund managers, private companies, to name a few. One thing to note is that the public institutions are not eligible to be the lead applicant. This would include development finance institutions, UN and government agencies, multilateral development banks, but they are welcome to partner with, let's say, a private sector entity to apply. Next slide. So the evaluation criteria that we look for, there's 5. Starting with additionality, here we're assessing to what degree does the structure address key market barriers to climate finance or to attracting private capital. In simpler terms, we're assessing whether the structure is proposing to do something in a more efficient or innovative way, or is it doing something that's redundant and already been done in the market. Next, catalytic potential. We're looking for the ability for the structure to scale to a new geography or a new sector, and a strong understanding of the local context. Moving on to gender equality, we're looking for the considerations of gender equality in the design and the operations of the structure. To what degree are gender risks and opportunities included? How intentional is gender equality in the structure? Next, financial sustainability. We're really looking for the plan to become self-sustainable over the long term, and whether the applicant has sufficient funding to structure, launch, and operate the vehicle over the long term, as well as its overall bankability. And finally, mobilization. Here, we're really looking for the structure's ability to attract new investment, especially from private investors, and show strong interest from the market when it comes to fundraising and raising capital. Next slide, please. So I'll just walk through the selection process. It's a phased process with 3 stages. So it starts with a call for applications. We're currently in that stage right now, and we're accepting concept notes until April 24th. Following the deadline, the program team will review all the concept notes against the eligibility criteria and assess whether it's a strong alignment with the program's focus areas. After that, those who have submitted promising concept notes will be invited to submit a full application, and that will be due by May 31st. Following that, those who are shortlisted will be invited to a closed-door virtual pitch day to present their concept to a panel of judges. And those who are selected to move forward in the process after that will undergo in-depth due diligence. We will do that both on the teams and proposals. And finally, the final stage would be to seek approvals from the investment committee and final approvals for the grant and the acceleration support. And we expect to announce the next cohort in November. Next slide. So we'd like to introduce some of the past grantees who've successfully gone through this process. So let me turn it over to Yihan Wang, Senior Associate at CPI, and Mauricio Rincon, Manager Director of Capital Solutions at Opportunity International.
Thank you, Trang. Next slide, please. Hi, everyone. I'm Yihan Wang, and I'm a Senior Associate at CPI. Mauricio, thank you for joining us today. And I'm excited to introduce you all this Climate Collateral Alliance vehicle, which was selected in our first cohort. So Mauricio Rincon is a Managing Director at Opportunity International. He leads the Climate Collateral Alliance, or CCA. This is a US $75 million blended finance vehicle to mobilize private investments to smallholder farmers and agriculture, micro, small, and medium enterprises implementing climate smart practices. CCA is an opportunity-led blended finance investment mechanism combining commercial capital, credit support, and technical assistance targeting financial institutions in sub-Saharan Africa. Mauricio, I have a few questions for you to allow those joining us today to understand a little bit about the CC facilities application process. Next slide, please. My first question is, what initially motivated you to apply for the CC facility? Were there specific goals or challenges that you were hoping to address?
Sure, and thank you for that, Yihan. I think that the name of the facility really reflects what the spirit of opportunity was. I said we were thinking about how our interventions in the climate adaptation space and our work with smallholder farmers in sub-Saharan Africa really means, right? Like organizations like Opportunity for over 50 years have been working really hard in trying to connect the dots between farmers on the field in the last mile of the, these low income countries and communities, and finding ways and vehicles to drive catalytic and impact capital for them. So when you think about the key characteristics of the program when it comes to additionality, innovation, localization, those things like really resonated with us, with our thesis, and motivated us to apply. I think the focus on those things that are really differentiators of organizations like Opportunity, that are focused on driving capital, training, and support in the last mile, were really important for us.
Great, thank you. Can you also walk us through the application process? Were there any specific aspects that you find particularly challenging in the application process?
Well, for this group, I wouldn't say particularly challenging, Yihan, but I do have to say, based on my own experience, that I would have to give kudos to CPI and convergence teams, because this process was really rigorous, and throughout all its stages. I think it was designed, and I'm confident saying this, I think it was designed with what I personally think are best-in-class practices for capital allocation decisions, very methodical and rigorous, and which that really meant for us was that it imposed on us a lot of discipline, and we had to make a very thorough and intentional effort in presenting and articulating the merits of our alliance throughout the process. Although the main objective of it is assessing and ranking proposals, I think there's the collateral benefit of preparing grantees like Opportunity for what is now, investor, catalytic investor and impact investor diligence and scrutiny. So it is definitely a rigorous process. It required time and effort, but quite honestly and candidly, it was important for us. So we're grateful for it.
Great to hear that. And my last question is, looking back, what advice would you give to others who are considering applying to the CC facility?
Yeah, that's a good one. And what I would recommend or advise everybody on the call is, for Opportunity in particular, as we were going through the process, we had to increase our own levels of self-awareness when it comes to the maturity of the proposal and what it really means for both CPI and convergence being market ready. Being able to articulate very clearly what is tested and proven in interventions, and balancing that with the innovation aspect of this, right? Like in being able to articulate what parts of the innovation are in a stage where they could be considered market ready, or how could those innovations build upon experiences that have been already tested and proven in the market. That's important. The second part of it, and it's kind of like related to this, I believe, is that balance between saying upfront what is additional, and in a very competitive process like this one's, being able to articulate clearly what is the additionality of the initiative relative to others, I think becomes very, very critical. And and it's balancing that additionality with the innovation and market tested, is that managing those three things simultaneously in a very comprehensive way for CPA and convergence teams is important. And then the last piece I'll say is, and you'll heard Trang speaking about this, the localization part of this is very important, right? The strength of local context knowledge and the ability to operate in markets seemed for us that it was a very important criteria. And Yihan, you had the chance to witness firsthand what it means, really having presence and boots on the ground. So reflecting that throughout the application, it's really important. It's very, very hard to fake or accommodate localization in such a competitive process. So that's another piece of advice there.
Great, thank you for the super helpful feedback and insights. And thank you for participating and your time, Mauricio. Now I'm going to turn it over to Haitham, an analyst at CPI, and Hossein Salfin from Acre Impact Capital. Over to you, Haitham.
Great, thank you, Yihan. Hi everyone. My name is Haitham Asser. I work as an analyst with the CC facility. I want to start by saying a special thanks to Hussein Sefian for joining us today. Hussein is the founding partner at Acre Impact Capital. Acre Impact Capital submitted the Acre Export Finance Fund last year and got selected for the CC facility's first class of vehicles. The Acre Export Finance Fund 1 is a private debt fund addressing the financing gap in the export finance market in Africa, allowing the closing of bankable climate-aligned essential infrastructure projects. The fund invests in sovereign-backed climate-aligned essential infrastructure in Africa across 4 impact themes: renewable energy, healthy food and water scarcity, sustainable cities, and green transportation. Welcome again, Hussein. I also have a few questions for you about your experience with the CC facility so far. And just to sort of start us off, could I ask you to talk about what you have found to be the most valuable with regards to your experience in interacting with the CC facility team?
Sure. So firstly, thank you for inviting me to speak today. And it's a pleasure to be here and share some of the experience that we've had at Acre. So before becoming a grantee, I think what I found really valuable is that the program team really took the time to understand the proposition and really get their heads around what we're trying to do. I think as Mauricio explained, when you're trying to put forward an innovative solution or an innovative project, you're by definition sort of breaking new grounds, and therefore having the team spend the time really understand what the proposition is about, going deep into how it works, the technical aspects and so on is something that I've found extremely valuable and very interesting. And I think to Mauricio's point, that interaction also tested us, allowed us to refine our thinking through the application process, which was invaluable. I think post becoming a grantee, what I found the most impressive is the reach of both the Climate Policy Initiative and Convergence in terms of the acceleration support. It's a very knowledgeable team with a lot of expertise in terms of structuring vehicles, designing vehicles, a very broad network in the market, which is obviously invaluable, and a very proactive team. So really, it was a very easy way of working because through the market acceleration support, the CPI team and the Convergence teams really became an extension of our own team, and it was a very easy way of working together and trying to develop this initiative together in the scope that we've agreed jointly. So that was really particularly helpful. I think the last thing I want to mention is the visibility that becoming a grantee provides is really something that's invaluable, because when you reach out to market participants with the CCFF sort of banner, you usually get a response within 24 hours. I think people really engage. They like what the facility is trying to achieve, including both the organization managing the facility as well as the backers behind that, and that really opens doors and is very powerful.
Thanks, Hussein. I'd love to hear that and really appreciate your insight here. It's been a pleasure working with you and your team as well. So I think it's sort of safe to assume that a lot of the folks on this call are potential applicants. It would be really helpful for people to understand if there were aspects of the selection process that you found particularly challenging as you were submitting your application.
So I think I'll echo Mauricio's comments that the application process was very thorough and methodical. So, and I think that the challenges and pieces that we found were really, in particular at the concept note screening stage, being able to put forward what your proposition is in a very concise way, while also highlighting in a very crisp way how you are meeting the criteria that were laid out, in particular around additionality, capital mobilization, and so on. So as you go through the process, obviously you get a bit more opportunity to expand and explain with a lot more detail. So when you go to the full application stage, you have more flexibility to tell your story. You obviously have the opportunity to interact with the team and so on. So that becomes a lot easier. But I think initially it's sort of getting your message out and getting your story out in a very crisp, concise way, and showing how your proposition really addresses the criteria that the facility is trying to address. I think those are what I would highlight as the more challenging elements.
Thanks, Hussein. I think that's all really insightful. I think you've already spoken to this, but that leads me to my next and final question. Looking back, what advice would you give to others who are considering applying for the facility?
Yeah, so I think being very clear on your proposition is obviously very critical. Be able to convey that both in paper and through the interactions with the team in a very concise and easy way for the program team to understand, because we're all coming at this from our own technical areas of expertise. For example, Mauricio was coming in from a smallholder farmer perspective. We're coming in from a large infrastructure financing perspective. So our ability to convey, the key messages, the uniqueness of our proposition, the innovation in our proposition, getting the balance between, the fact that the proposition is market ready versus the innovation. All of that is really critical, and really demonstrating how you address the key criteria, how you address additionality, what is the catalytic potential of your proposition, and so on. So I think that is really important. I think as you move on through the stages, being very responsive to the team, I think, is critical. The team has a lot on its plate. At least that's the impression that I got, and evaluating many propositions. So your ability to be very responsive to their questions and comments and so on I think is very helpful in terms of building that working relationship and initial trust between the parties. Ultimately, it's the key advice is really having a clear, crisp proposition that you can convey very clearly and succinctly to the parties. There's a pitch stage where you pitch to the investment committee that also has to be very crisp and clear. So that clarity of message and focus, I think, is critical. The last point I want to make as well is transparency is really important, right? I think what the facility is trying to do is support innovation, and obviously innovation always has an element of unknown. So in some situations, we didn't have all of the answers, and we were very transparent in saying, look, we don't know this particular, we don't know the answer to this particular question. That is something that we will work through during the project. And I think having that transparency is really important, because it helps the team understand where you're coming from, and also builds the trust in terms of what you know, what you don't know, and what you think you can work out through the project.
Thank you so much, Hussein. I think particularly on your last point, making it clear, what you know and what you don't know is really important. The application, there has to be some justification for us to come in and help, you as an applicant. So I think, folks will really appreciate the very actionable and discrete advice that you provided today. Really appreciate your time again. I see that there's a flood of questions in the chat. So without further ado, I'll now pass it back to Carla and Trang for the audience Q&A. Thank you again, Hussein.
Thank you, Hussein.
Thanks, Hussein and Mauricio. I think that was very helpful to help understand the process. So we do have a lot of questions coming to the Q&A. We are going to start grouping some that are most recurrent related to eligibility. So, for instance, the country eligibility, we've been typing into the chat, but please refer to all the list of eligible countries. Specifically, there are questions about Caribbean non-NDA, non-ODA label countries. We focus on countries that are in this list, but also that are in trajectory to graduate. So, for example, in the Caribbean, that would include Panama and Guyana, which are not completely graduate. But in the case of Chile, which I saw there's another question related to that, Chile wouldn't classify. In the case of Egypt and Afghanistan that were also raised in the Q&A box, they will classify as well. But please refer to the list, because it has the definition, and those are the ones that we consider eligible for the program. The other question is related to the type of organization with support. It could be any type of institution, so it could be for-profit or non-profit, but it has to be a registered entity. So it can be just an idea submitted. It has to be a registered entity that is working towards implementation of the solution. So that also is further explaining in the website. So if you have those, you can look there for specific examples. Now I want to pass it over to Tran to explain what types of blended finance structure we support and what do we refer by the mechanisms that the program will target.
Sure, thanks, Carla. So the way we define blended finance is the strategic use of public or philanthropic capital to mobilize private capital at scale for the sustainable development goals. And the type of structures, we're agnostic. It can range from guarantees, insurance products, funds, facilities, bonds. We're open in terms of the structure itself, but it would have to have the main mandate of attracting private capital through the catalytic use of concessional capital.
And there is also another recurring question related to the type of capital we provide. So maybe you can explain the nature of the funding that we offer.
So we provide grant funding only, and the way it's structured is it's advanced based on pre-agreed milestones and deliverables. So once you get to the contracting stage, we would discuss that with you. The maximum is $500,000 that you can apply for in terms of the budget that you can submit to us.
Great, thanks. There are other questions related to the stage of development. So countries that are already providing funding or implemented on the ground are eligible. The stage that we are targeting is ideas that have been tested already and have some track record. It could be through a proof of concept, a small pilot, or MVP, but there has to be some proof of the model that has been implemented to be eligible for the solution. So if there is a mechanism that is already deploying capital or having operations on the ground, it doesn't mean that it's too late a stage for the facility. Just to clarify that. So there's a question from Jose Opaso about the thematic stream that I mentioned, and I'm going to read the question. Is, will the current call have a focus on agriculture and adaptation in Southeast Asia, meaning that other regions or finance structures deploying mitigations options are not considered? No. The focus of the facility is global. It means that we have a specific thematic streams where we will prioritize solutions that target Sub-Saharan Africa and South Asia. But anything related to mitigation and adaptation is eligible. This thematic stream just have more slots to support solutions focused in these regions and addressing sustainable agriculture and adaptation challenges. So that's a clarification. I saw there are other questions also related to that. Let me see what else we can address here. So what is the type of support? There are several questions from Adnan Aziz related to what's the amount of the funding that we provide, the average size of the financial support, and what is the technical support. So we provide up to 500,000 in grant funding. Usually the average ticket size from the first cohort has been between 300 and 400 or 450. So it varies depending on the needs. So what we're expecting to see is a justification of the use of funds and why we would be needing these funds. And for the technical support, we separate or classify the types of support we provide in 3 categories. One is a strategy, so everything related to business development, market analysis, something that could be strategic and help with the go-to-market strategy or the implementation strategy of the solution. Second is fundraising, so everything related to fundraising activities like investor matchmaking, funder mapping, funding strategies, etc. And finally, operations. So this is more related to, for example, helping with governance structures, communication support, or anything more related to figuring out the structures or more efficient organization internally to deploy that instrument. So that captures the range of activities that we can provide with this program. And also in the application, we expect to see you justifying the types of activities you will need support with and how the CC facility will add value to that end. So maybe there's another question that Tran you can address from Artem Abgarian is what examples of successful applications or ideas can secure funding? What is meant by the structures that have proven track records? Does this mean already successful deals or what kind of feasibility study documents are implied? So yeah, there are many things that we can cover there. So yes, please go ahead.
Yeah, so if you want to get a sense of the portfolio, it is available on our website just to get a sense of who we awarded a grant to last year. But generally, by track record, we like to see that either they've started a small pilot already, or they've already launched a prior model that now they're expanding with the use of the grant and the technical support. A proof of concept stage or feasibility study typically comes before this, which is what is targeted by CPI's lab and then converges as design funding. Those are much earlier stage than what we would consider under this facility. But once you graduate from those earlier stages, you would be eligible for the facility support. And the types of structures, again, it can vary, right? Like the last year's portfolio, we had 6 that we awarded to. We had funds, we had guarantee products, we had facilities as well. And we had about 2 out of the 6 were from Global South applicants.
There is another question. Thanks, Ron. There's another question from Omar Hernandez. Is biodiversity, including MBS sectors, applicable for the facility? In the application, there are different sectors for vehicle targets. Are these prioritized or only applicable? So yes, biodiversity is including MBS sector. So they use, for example, of biodiversity credits could be one of the mechanisms used in the structure. We do have a broader focus to incorporate nature-based solutions overall. And yeah, the sector, the vehicles could target different sectors or multiple sectors at the same time. There should be just a clear rationale of why is this a value added or why the vehicle is addressing multiple sectors at the same time. There are a couple of other questions related to number of times to apply to the facility. So yes, if an applicant is not successful in this round, they are welcome to apply during the next round. I think it might be helpful to clarify the pipeline that we have received last time as a benchmark. So we received close to 300 applications for the first cycle, and we have only supported 6. So it's a very competitive process. There is very strong ideas, and we definitely encourage anyone that is not so successful in the current round to apply to the next ones, because we want to keep the pipeline and our support expanding and trying to address more solutions. So yes to that one. Then let me see. There are several questions that we're going to try to address also by writing, but yes, please bear with us. We have over 100 questions in the toolbox. So let me select another one. So maybe Tran, you can address this from Anindya Pratisamara from Indonesia. Is there any limit of what kind of project can be implemented for the funding?
So not specific projects, but it's more focused on the types of activities that could be covered. So just going back to what the grant could cover, it could cover fundraising activities. So that would include travel as well as staff costs, and then consulting, legal costs for the setup of the vehicle, for legal advice and legal documents, and then pipeline development. Those are very common activities that the grant could cover. But at the same time, there's the acceleration support that you could also take advantage of, where there are activities under fundraising strategy and operations that in-kind support that you could receive as well.
Then there is another one of the use of funds that the grant can cover. So one from Albert Mutasa about whether the grant can be used to pay for services like climate risk insurance. And then I saw another question related to whether it could be to pay as new staff or working capital. So maybe you can provide some guidance on that.
Yeah, so in terms of the use of funds, again, we will have to look at the specific budgets to really make a call, but it would have to be tied to the project that you're launching, right? It can't be general overhead for your business or company. It would have to be any activities required to launch the vehicle that you're proposing to us, and that could include staff costs or staff time working on the initiative.
Great, thanks. So there's a question from Lola Fernandez asking, how do you demonstrate additionality, and are you using any international frameworks? I also saw another question related to how we define innovation. So additionality and innovation are closely related. We don't expect to have something too out of the box. We define additionality in terms of proposing something that are addressing barriers that have not been addressed before, or are addressing those barriers in an improved way. So for example, in the energy sector, if there is a solution targeting the traceability or monitoring of the impact, that could be a way to address the implementation of renewable energy projects with the added component of these tracking mechanisms to improve the deployment and scalability of this type of projects. So similarly, this applies to different MBA solutions with carbon market components and how they track and verify and trace the carbons that are generated. So don't think about innovation and additionality as something too far off. We want solutions that are just addressing in a different or more efficient way the typical barriers that we encounter when implementing climate projects. Let me select another question. So yeah, maybe Tran, you can take this one. This is more of an example from Sonam Wangmo from Bhutan. They have a comprehensive proposal for biowaste to biogas and biofertilizer project. And their goal is to raise 1 million for the project and have successfully secured $500,000 thus far. So they want to know whether they are eligible to apply for the program. And I guess you can touch a little bit on the sector, but also like whether if this is a financial mechanism to be eligible or not.
So just based on what I've heard, without the details, it sounds like it could be a fit, but really we need to better understand what's a financing vehicle that you're using to fund biogas technologies, for instance, and the sectors and geography specifically. But it sounds like you've already raised some capital. You could be eligible given that you're probably going to meet the maturity threshold that we're looking for. But if you have more specific questions, please just send us an email. We'd be happy to address that in more detail.
So maybe to complement on that, I see several questions related to what type of projects could be eligible, and just want to stress that we're looking for financial vehicles, financial structures. So the type of organization, whether it is a startup or a more solid institution, is not a problem. What we're trying to support here and provide the funding and the technical support is to the implementation of the vehicle structure. So as long as there is a financial mechanism involved in the project, the sector could be anyone. So circular economy, I saw there bio waste could be eligible as well, but what we are going to assess is the financial structure that is behind of the proposal. For example, there is another question here about the social sectors organizations that can apply. Yes, definitely. There are questions about the pipeline that we received in the last round, so from Amy Clark. So maybe to reiterate what I mentioned before, we received close to 300 applications, and through the different stages of the process that Tran explained, the funnel was reducing. From those 300 applicants, about 45 were invited to submit a full application, and ultimately 6 were awarded funding. So to cover or to keep answering similar questions about types of organizations, commercial banks can apply through SPVs or entities. And again, as long as these are registered entities proposing the solution, they are eligible for the program. There are several questions about the sectors and whether the funding is targeting specific sectors, or, for instance, one from David Appleby of specific commodities. Maybe you can clarify what is our mandate in terms of sectors.
So no, we don't have specific sectors or preferences, right? It could be any sector aligned with climate mitigation or adaptation. So we would consider any that would be focused on that. So if you go to our application, you'll see we do have specific segments and subsectors in terms of what we would consider, and that would give you a better sense as well.
Great. There is a question from Jawar Burbor, and he wants to understand, why do we mean by application design upload? And that's actually like a great clarification question. So we expect to see a diagram of the solution to understand how it works. So yes, in simple terms, it's a drawing, but yes, it's a graphic where you can easily explain how your mechanism works, and yeah, and what are the pieces of it that you envision, how do you expect investors to invest on that, and how do you expect to repay investors. So it could be very simple. We're not expecting something too complex. So, but yes, we want to see what's the rationale behind and how it works. There is another question from Martin Rabia about if there's a concept note template. So if you go to our website, we do have an online submission template. So you can do everything directly online. So, and once you finish, you just click submit and we'll get your application. So there is a question from Arten Abgardian, and I think it's also a good clarification question. We mentioned that we're financing the registration of the structure, but how is this possible if you require already registered vehicles? So we require registered entities implementing the vehicles. So the vehicle not necessarily need to be registered yet, but it's important to clarify that the proponent or the project sponsor putting out this proposal or this application needs to be a registered entity. So for example, if Tran or I independently as person want to submit an idea, we don't have a registered entity behind, or we don't have an organization behind us, we can do that as individuals. Because, and the reason behind this is because since there is a deployment of funds, we need to conduct compliance checks and different KYC forms to make sure that the money is going through the regular process and that it's being used for the use of funds requested. So that's the difference. I don't know, Tran, if you want to add something to that one. I think it's good to clarify the distinction there. So there are several questions about the previous cohort and what was the nature of this cohort. So maybe you can give an overview of how it was conformed in terms of sectors and geographies and type of structure. So here there are questions of whether we have a structure from Latin America or for Africa, and which sectors those were targeting.
Sure. So out of the 6, like I mentioned earlier, we had 2 that came from Global South applicants. So one of those was focused on the Amazonian region, and the other was focused on Brazil. And the remaining 4, we had primarily focused on Sub-Saharan Africa, and the main sectors there were sustainable agriculture, climate-friendly infrastructure, renewable energy, were the main ones.
Okay, great. And I think we can take one final question in terms because of time. We're gonna try to address everything in typing, and this is related to what is our preference between a scale-up phase and pilot. Maybe Tran, you can provide an overview, and then I can complement that one.
Sure. So generally, when we say pilot, it's probably something a lot smaller scale. You're testing something out on a smaller, let's say, a capital raise to see if the model has legs or it could be viable before you really set up a dedicated vehicle for it and target a much larger capital raise. You might have deployed a couple of loans to build a track record, and now you'd like to go raise a $50 million fund because you feel like you've proven the investment thesis and you like to now scale that product up. So that's generally what we see in terms of the trajectory. Start with that pilot and you scale to a much larger size to, it could be by region as well as the capital raise as well.
Great. Well, I think that covers that well. So maybe I'll take one more and then try to address final ones that are related to specific questions that you can find in the website. So what are the parameters that you focus on for shortlisting? We mentioned that only 6 got selected. So if we can share what parameters are important? Yeah, I don't know if you may want to take a crack at this.
Sorry, Carla, can you just repeat the question?
The parameters that we focus on our shortlisting. So it's essentially our key criteria that would make the difference between the 300 applications and how we get to the 6 selected.
Yeah, sure. So just to emphasize that it goes through many rounds of internal review. So, we do have different folks from both CPI and conversions go through the assessment of each concept note and full application. And we have those 5 key criteria. Again, it's mobilization, additionality, catalytic potential, gender equality, and additionality are the main ones. And right now, we don't have specific weightings for each. So what you see is basically seen as on an equal basis. But really, it is a combination of that and also the experiences of the reviewers. We will bring in experts and specialists and also practitioners in the field to really assess, which ones are the most promising and actually have a shot at, being rolled out in the market.
Great, thanks. So maybe just to wrap up, many of the things that we have mentioned, you can find them on the website. To apply, go directly to our website. We do have a FAQ section where you can look at the eligibility, the explanation about the key criteria that we use, examples of financial vehicles, the list of ODA eligible countries. And finally, just one clarification, which I saw coming through the chat, is that this facility is separate from CPI's Climate Finance Lab and from Convergence's Design Funding Program. Those operate independently and separate from this program. You can also go to the websites and see what is the criteria and the eligibility for those and when the open calls are live. So yeah, just to make that clarification. Well, we are 1 minute over time, so I want to thank you everyone again for staying with us through the whole webinar. And we hope we see your applications coming in. Thanks.